We're looking at first data point, which is that in the run-up to the election, let's say 20 trading sessions, about a month, in 2004, markets fell by 8%. 2009, they were up by 8%. 2014, up by 5%. 2019, markets actually were flat in the run-up to the election. That is important. But the interesting bit for us this time, and they always say, what is different? Naya kya hai? This is the differentiating part. The FI holding, what Aisha and Kunal just discussed, the FI positioning in the F&O market is at a 10-year high, which means the number of short positions by foreign institutional investors are at a 10-year high. But similarly, the number of the positioning of retail in the F&O market, and bear in mind that the market participation by the retail category is also expanded, is at a all-time high. So it's like reverse. FIs are hedging by going short, retail is long, assuming that they expect a post-election rally. Is that a fair assessment, Noresh?
So there is one way to look at the data. The data is in number of contracts, and the contract value for Nifty has gone down from 50 to 25. But even after cutting it by 50%, it is one of the larger short positions we've been in. And the fact is, if you look at it, FIs have been selling. They've been selling in cash. They've been selling in futures. But the fact is, if you look at DII money over the last few years, every year DII inflow has been higher than FIIs. And we are at the cusp of the time where DII holding will be greater than FII holding. So what really matters going forward is, post-elections, we are not even considering the fact that FIIs can become buyers. If that happens, the flow changes could be phenomenal in terms of market participation. We've not seen that for, say, we saw it in 2020 to 2021 and see the smoothness of that rally. We've seen it in 2017. So when DIIs plus FIIs become buyers, we are not in sync to understand what sort of moves can happen.
So I'll now open 3 questions, and I would urge everyone on the panel to react to these 3 questions. I'll start with you, Noresh, and these 3 questions are simple. Market scenario in these, market reaction in these 3 scenarios. Clear majority. What happens to market immediately? What do you see the market reaction?
Up.
No, up to hoga hi, but how much?
Closer to 23,000 or 23,200.
23?
23,000 to 23,500.
Okay, so not like a sizable rally.
Not really. You're not looking at a 10% circuit type moves which have happened in 2009.
Weak majority?
Still we'll be up. We may not go to 23,500, we'll be at 22,800.
Loss? Change of government?
Change of government, I think it is not in the picture as of now. If that happens, we've seen 20 years back, 2004. But the fact remains, we are only looking at India. 2004, 17th May, 8 out of 10 markets across the world were down because of our Indian elections. No, the trend was down. So as of now, the most important part is the trend across the world is up.
Such a great point.
Let's have your list. Firstly, what's on the avoid list completely in the election event? And what are your large cap, mid cap and small cap ideas?
So the avoid list is to look at avoid chemicals, which is overowned across the board. So that's a sector which has done really well. And then large capital good companies, because they've gone overboard. A lot of these stocks are at crazy valuations and crazy strength. If you look at overbought zones rather. So the risk reward is off. So that is a clear cut avoid.
In terms avoid ABB Siemens?
Yeah, all of them.
And L&T also?
L&T is not in the overbought zone. So ABB, Siemens, you can look at other smaller companies also in the same. Schneider Electric has gone way up. So across the whole capital goods space, this is a time to actually book profits. The ideas which I like, one is continue to like metals. So Hindalco is the new name, which has broken out of a 2-year cup and handle. Aluminium prices have bottomed out, started showing a rally. Very similarly, we were placed on, say, Vedanta when we were discussing. Copper was at $4. Now, aluminium could be the next trade. So Hindalco is one. Second, mid-cap idea is GE Shipping. That's a stock which has been in a strong uptrend. We are seeing a lot of volumes, bulk deals happen over the last few weeks. It's been sideways for the last 3-4 months. Decent enough numbers which have come up for the quarter. So the stock looks interesting, is more a neutral, market neutral stock and not very well tracked or interest in. So that is second. Third is Delivery, which is a stock from the new age companies which has gone through a 50% correction. Then we get through that 12 to 18 months of consolidation. Very similar to what happened at PB Fintech at 400 rupees or 50-70 when we were looking at Zomato. A very similar structure. The stock is absolutely listless for the last 3 months, almost at a 20-pointer range. So at 400, 450, this looks interesting as a turnaround story in the new age companies.
And you would buy these stocks irrespective of the election?
Yeah, so all these three names are irrespective of the elections.
Naresh, Monday, June 3rd, what would be your strategy?
So the fact is, you just stay the course, continue to the same asset allocation. Elections, so say I started in the markets 20 years back and lost major money shorting the markets after the election results, and we got the best markets, right? So assumptions is we focus a lot on our events. Same way 2017, demonetization happened, we got a rally across the world. It was not because of it, it was a global rally. So for now, if the global trend is positive and if you're a trend follower, you do nothing, you just follow the trend. So if we were in a 10% downtake for the global markets, I would have said take the puts. And 2 weeks back, they were at 10 IV, you could have done that. Now even at 20 IV, the market is not pricing a 10% move. So in that sense, do nothing. Continue with the same.
It's just